Oh wait. Oh no.
But you should, because you're sharing your screen.
Yeah, I've done it. So I'm going to explain something about momentum and how we can utilize it to our advantage. So essentially, momentum, the easiest way to sort of see it is by basically looking at candles and seeing how many candles it's taken to create a move up and how many candles made to create a move down. Now, the best way to do it, for example, we'll fixate on. Let's just focus on this sort of move from to that low there, and we'll go from. Okay, so that's the drop, and we'll count the move up. Okay, so we've got two zones here, right? So we've got the first bullish impulse, and then we've got the bearish impulse as well. Now, this trade has so much confluence for it, and momentum was one of them, which I haven't really explained too much. It's not overly important, but it's something that we can use. So essentially, when you get momentum that's quite high to the upside, but then you get a slow movement coming down to the downside, we know that there's more bearish pressure for this for the whole trade. And then it feels the other way around when you've got more impulse, like a quicker impulse to the downside, but then a slow correction to the upside. Then we know that pressure is bullish. So this is quite a good example of this. Is because obviously this is counter trend. If you look at the overall picture, we know that it's fairly bullish on this time frame. If we do go any higher, it is bearish and is in a bearish zone, which is why I took it. But here, what we can see is for this big impulse, it's 1, 2, 3, 4, 5, 6 candles to go up, and coming down, we've got 1, 2, 3, 4, 5, 6, 7, 8. Did I just count that right? 1, 2, 3, 4, 5, 6. Oh, 9. Okay. So it's taking longer to come down. That means that the momentum is to the upside, and there's a slow correction phase, which means that there's more pressure for the downside. So it sort of confirms whether we're selling or whether we're buying. Now, you can't obviously use it on its own, but it's just more, we know our entry point was here from that order block here, right? As we see, it would have triggered very nicely if you took it. But we know that where our entry point is, the momentum is just confirming where price is actually going to head to. And it's the same thing for a bullish move. Let's see if we can find one. Let's see if I can find an impulse. Does that make sense to everyone, by the way?
Yeah.
Yep.
Yeah. So essentially, for a bullish move, you have a slow impulse, a slow move up, and a quick impulse down. You know, when sometimes you get like a trade where you get like a quick impulse and then a really slow move, and then it carries on. Right?
Mm.
Now, what we're trying to find is areas where you get these random impulses, like here, like a quick impulse, slow correction. Then after you get this move up, you notice that you get a bigger move down. That's the move that we're trying to obviously grab. And because we already know what our entry point is, we sort of have all the confluences of the inefficiencies, the momentum to sort of tell us where to take the trade and whether our bias is correct in that sense. So that's another thing we can sort of add. I'll make a separate video and I'll upload the recording to this on Zoom. But it's just another thing to just have in the back of your mind. It's not overly important in that sense, as in you can trade as we have been, but it's just something that you can potentially use. It's not overly accurate at times, but it's something just to have there for you, especially if you're going counter trend. It's something just to have like an idea about to understand, because sometimes if you see like a massive impulse to the downside, people are going to start trying chasing, but well, we've got a pullback and we're sort of questioning whether price is just going to break through or not, because prices obviously come to this order block here and you can easily just grab liquidity and flow in. But we know that momentum's to the downside, we've got pressure to the downside purely because of the order block here, and we've also got the daily order block and the weekly order block as well. So that's the daily, and then the weekly was here, and we sort of already rejected the weekly one. So yeah, so that is momentum. If that made sense. Any questions on that?
Yeah, quick question.
Yeah.
So on the momentum side, it's quite clear, obviously, fast going up, slowly coming down, and then, but why would you then put for example, a sell limit instead of looking for it to carry on going up? What's the reasoning, if that makes sense? So if it's going up faster, and the momentum slowly coming down and then back up again, and then looking for a sell?
I'm not sure what you mean. As in,
so on that 4 hour,
I didn't place a sell limit here.
Oh, I thought that's what you were talking about. Okay.
No, so I mean, if we're going to use our order block, so for momentum, we won't use that on its own to trade. It's just something to add as a confluence. For example, you can trade the order block obviously from this 4 hour and place a sell limit here if you wanted to. Obviously, but we don't know if price is just grabbing liquidity here and going to fly up, which is why we wait for a lower time frame reversal. But I mean, you can put a sell limit here. Initially, I started off with a sell limit at the 50% of that candle. Then I thought it would be a bad idea. I'll just wait and see how price reacts, which has worked out better for us, and we got a better risk to reward in that sense. But yeah, I wouldn't place a sell limit really just based off that.
Yeah, okay. Just the confidence. Cool.
Anything else? I'm assuming there's no more questions.
You look at AJ, because it looks like it's in the order block right now. Oh, sorry, Aussie, Japanese. Maybe 1 hour is a bit better.
It is. It is, and we did get a break of, not really a break of structure there, but the only thing that's sort of alarming here is we've got on the 1 hour purely. I haven't. I'll see the other time frames, but we do have a low and then a lower high. But it's failed to break structure here, so we can see how price reacts. Unless we've missed it, we can see how price reacted on the minute. Oh, well, I didn't even draw the zone, did I?
You could still buy this with a target of 76.8.
You can, yeah. I mean, if you look on the hourly, I will look to you can have your target to this inefficiency level and the breaker level here, but I wouldn't look for a long-term buy just in case because of this change in structure here. Let's check the daily.
Yeah, I mean, that one on Friday I was aiming for that inefficiency. Yeah, on that odd JPY at the bottom.
As a buy, was it?
Yeah, as a buy, just up to that inefficiency because I wasn't sure whether it would carry on due to the fact of the lower highs as well. I closed it on Friday just to practice for FTMO.
It's in a weird position, to be fair, overall. I mean, you could place a short-term one. I mean, you can still use the concept of the order block, and your target could be this breaker region. Let's go here to there. That was your first target, and see how it goes. I don't know if we missed entry. Actually, no. You can wait for a new high to form, and then wait for inefficiency, and then enter off that. I think there might have been one. I mean, there was one here as a breaker region with inefficiency sitting there. So that we could have been in the trade at that point, but you can wait for. Oh, actually, there is one here as well, which would have triggered quite nicely. I think just wait to see how it plays out. If you get more setups like this, you can take it as a long, but I wouldn't. I would monitor price when it gets to the hourly breaker region here and see if it continues going up or not. It's only alarming purely because we've got a lower high being formed and then break of structure here. If we just look at this sort of section there, if you're just looking at that, so we can monitor price and see if it does break or not.
Yeah, so, something I don't really get is how far do you kind of consider? Can you go up and left a little bit in terms of like breaking structure? Because it's breaking all the highs here. I don't know if you can see this.
Yeah.
Like, would you consider this as a break of structure?
It is on this time frame, yeah.
Yeah.
So the whole concept of how do I get rid of these, by the way? oh, it's gone. But yeah, so in terms of this concept, you can use this on technology these days. It's mad, isn't it? It's in terms of like the whole concept, you can use it on any time frame you like. I mean, if you're using like the hourly time frame, for example, you would set like hourly targets. Like for example, say if you're going off this order block, right? Your target initially would firstly be this high, then it'd be this one. But the reason why I prefer using the higher time frames because at least we've got a higher time frame bias and a higher time frame target, which is a bit more reliable than having a smaller time frame move. I mean, yes, it's pretty quick and it's a quick return, but the probability is is lower the lower you go.
Okay.
If that makes sense. I mean, this could be a higher time frame OB playing out. We don't know, but if you whatever time frame, even you could even do in the 15-minute if you wanted to, but whatever time frame you're entering off, just bear in mind that your target should be considerably smaller, purely because you're not going off a higher time frame entry point or target.
Okay.
Anything else?
Yeah, I wanted to ask you, do you remember that old Vertex EMA crossover strategy? What actually happened to that? Because I'm not hearing anyone talk about it anymore. Is anyone still using it?
I've not been using it anymore. I've just been focused on this.
Victor still uses it.
Yeah, the guy that created a bot for it, he still uses it, and it's still doing pretty well. It's more that you have to like sort of enter everything to like catch on. I think to be fair, it's still doing well. That strategy. I've not been using it. I don't think Ben has either.
No, it's just hard to get the risk reward that we want. Obviously, it's got quite a high win rate, but the risk reward isn't great. Like 2-to-1's pretty much what you usually aim for.
No, I do understand with this one you get like 33 risk to reward sometimes.
Yeah. So, I mean, that's the only reason. There's nothing wrong with the strategy at all. It's just this one's providing like mad results. I don't think I'll.
It just depends on your style, doesn't it? Really, because if you think, for me, trading's like quite stressful, especially when you trade it full time. It's because you can't go through losing days and then realize you don't have the money to do whatever you wanted to do, like, you know, to get paid in general. But with this, it's like once you win one good trade, you're pretty much safe, and it just removes a lot of the emotions. For me, anyway. I don't know about Tans, but
no, I do understand, because then you have like quite a big safety net for like the whole week.
Yeah, all it takes is just one trade, and my entire month is fine. Like I'm gonna have a withdrawal at the end of the month, and there's no way I lose 50 trades in a row, you know. So it's like,
no, yeah, I do hear that.
Just makes it a lot better for me mentally. But yeah, it's up to you. Like every strategy works as long as you've got a plan and you follow like strictly to your plan. It doesn't matter what you use really. It just depends on what you want to use. But yeah, for me, order blocks is just the way. Or Wyckoff in general is just superior.
Wait, so this order blocks, is it Wyckoff? Because I'm confused. Is Wyckoff like a more advanced version of order blocks?
No, so they're both concepts. Wyckoff sort of uses. So Wyckoff and order blocks come under one. Wyckoff is basically it's description of phases that markets have. For example, if I go to if I go to this one, let me try and find a clear example. Okay, yeah. So if you just focus on, so there's 3 phases in. Well, okay, there's 4 phases really. So you've got the accumulation phase, which is a phase before a bullish push, right? Then you've got like a reaccumulation phase, which is a phase that you have where there's slight consolidation, then it continues to a bullish push. And then you get a distribution phase, which is the phase that you have before a bearish push. And then you get a redistribution, which is sort of consolidation like this. And then it continues, and then the price just goes back to another accumulation phase. So Wyckoff, the whole strategy is, well, not strategy, the whole concept is based off different phases of the market cycle. And then the whole idea with OBs is the fact that you're entering off the whole concept of order blocks. So Wyckoff sort of tells you what phase the markets are in. So Wyckoff sort of tells you what market phase, what phase what phase or cycle you're in, and then you use OBs to sort of enter the trade for higher confluence.
Okay, that makes
If
sense.
that made sense, yeah.
Yeah,
So,
yeah.
but like remember that they're both concepts. There's no set rules for them. Because the annoying thing with Wyckoff, which is quite difficult to find, is if I go to the 4 hour. So Wyckoff has specific areas and points, right? And essentially, when I talk about the spring in the Wyckoff video,
Yeah.
now if we're looking at the trade moving, right, we can say that that would be the spring, or that would be the spring, or that would be the spring. Like it's quite hard to determine as to where like you'll be looking for the spring. But then if you go with if you look at OBs, for example, you know that price is going to have some sort of reaction to this level here, right? Which you did. So we know we're going to look for like a phase, and most likely because this is looking for a sell, we're going to be looking for a distribution phase, which is essentially we're still going to look for the test, the spring, and then we're going to try and look to enter off that pullback to this once we get a break of structure. So that's how you sort of determine how to use Wyckoff. But Wyckoff itself is quite hard to know what where you're going to put your spring, where you're going to put your test, things like that, and where's the break of structure. That's the hardest bit. And then order blocks sort of gives you ideas of where price can head to, because order blocks is everywhere. Like anywhere, there's like order blocks literally in every single before every single impulse. There's an order block, and it helps you decide sort of which one you're going for. It's like it is very complex, to be fair, and it's quite hard to break down and get used to. But essentially, following the whole order block situation, and the reason why I say to look at the higher time frames is because you're already looking at order block zones. Even though we're not thinking about Wyckoff, we're still using Wyckoff in the sense without actually actively looking for it. This trade was based off order blocks. However, this is a distribution phase playing out. So this trade can actually be huge, but we didn't even think about that. We didn't even think that it's a distribution phase. It was more the order blocks reaction that I was looking at, which sort of tells you that you don't really need to focus on Wyckoff. However, it's something if you want to read about, you can, but it's not necessarily needed.
And we are going to try and put both order blocks and Wyckoff into the next part of the course. So like they're both going to be there for you to learn anyway.
When's that release?
Fuck's sake, Tony. Don't know. We'll see.
I swear you said like late July.
Yeah, well, we're going to do technicals, but we're scrapping that completely now.
Who's doing love hearts for this?
Yeah?
Someone's doing love hearts and get rid of it.
That already looks.
That'll be Harvey. It's got to be. Right, Tans, can you host me? I'll quickly go over trends just because.
Oh, it's Rahul. As you can see, it's him.
Hey.
That's Henry now. How do I give you? Oh, sorry.
But you need to make sure you're still watching the Zoom because obviously you're recording it for whoever. So. Yeah, can you see?
Do I need to?
No,
Am I still sharing my
I'm
screen?
lost.
Oh, nice.
I can share and just take yours off. Okay, can you see?
Yes.
Okay, so obviously with order blocks, and Henry just briefly touched on it with the counter trend, we're just talking about like trends in general. To identify trends, we try and stick to daily and 4 hour just because they are the most sort of prominent trends that you're going to be using for your trading no matter what time frame you're on. So let me get my brush. Okay, so everyone's, say this was the high, right? We'll start from here and just ignore everything to the left. This will be the lower low, lower high, lower low. Now, trend doesn't change until it breaks the previous high on a downtrend, and the opposite for a uptrend. So again, right here would be your lower low, and lower high, sorry, lower low. And right here, it's broke it. So right here, you're waiting to see if we get a trend change, but you'd obviously be looking for some form of reversal. And if we look here, it literally just continues bullish. There's no pullback at all. This could have been it as well, but then we continue to break the lower lows. So at this point here, we're still assuming it's bearish. So essentially this could have been your most recent lower low, lower high, sorry. Now, once price breaks this right here, so like this, we clearly break and we clearly stopped way above it, whereas this one was sort of in line. Just a fake out essentially. But right here, even though we fall back under this structure right here, this is still classed as bullish structure. So even at this point when you're identifying trend, this is still bullish right now. This would be the higher low. Tooney's just dropped out of the call, I believe. He's back in. Anyway, so this would be the high. You'd be looking for the higher low, and you could potentially buy here. And then again, price breaks this low. So now we're looking for sells again. Comes up. It doesn't matter if it breaks this line until it breaks the most recent high, which is here. So from here, when you see all these wicks, and then obviously you would be looking for order blocks or whatever on the smaller time frames, since we're on the daily right now, this would be where you'd be looking for your sells. And again, I'm just going to briefly go into the 4 hour, see if we can see. So yeah, you would see similar pushes. I actually have all my candles the same color, so it's a lot harder to see order blocks. But yeah, so you'd be able to see whatever's going on here. You could place your entries based off those. And then go back to the daily. Again, it's quite clear. This one wouldn't be a lower high because price previously didn't break this previous structure. So this, until you get the lower low, you can't have the next lower high, if that makes sense. So obviously it's got to go lower, lower, lower high, then lower low, then lower high. So until you break this, this wouldn't be classed as a high, which I think a lot of people kind of struggle with, because some people would call this the lower high, even though we haven't made the next lower low, because this was the high. So you can't go from high to high. It's got to wait for this low. Then this would be a lower high. And again, price breaks it here. Obviously, this is higher than this level. I know it's not illustrated very well, but hopefully you understand the concept. And again, it doesn't matter if price breaks below this previous high anymore. We're still bullish until we break this level here. So yeah, so this would be your buys. Right here, this is equal lows. So again, we're still looking for buys. And if you are still trading technical, and obviously this is your double bottom and still in the bullish market. So at this point here, this is where you would be buying. If you were trading whatever, and your target would probably be here. So you would have something, you know, I don't know, like this. And then that's still almost 1 to 4. Let me shrink that down. Okay, so let's see, where are we? So we're looking for highs. This would be a higher high, potentially higher low here. And this doesn't break the high again. So we're, you know, we can't call this the higher low anymore. It's broken this structure. Now we're in a downtrend. And again, hopefully you just get the concept. It's pretty straightforward. Again, in this area here, it's quite hard to identify a trend. So that would be consolidating obviously at this point when it breaks up, you'd be looking for buys again. But once we drop in and then starts doing this, it's hard to identify the trend. And then of course we break the market here, break the range, and then straight into buys again. You higher, low, high, high. This could potentially be a high, and then obviously we'll be expecting the low. But yeah, hopefully that sort of clears up trends in general for most people. Because we do have issues with identifying trends. So just remember, it's got to go low, high, or high, low, high, low. You can't have a low and then another low. You could move it potentially, but it's up to you. Just try and simplify the trends. And even if it falls back below structure like here, if this is the bullish, for example, we've broke this structure, come back down. It doesn't matter if it's come back below this area. As long as it doesn't break this bottom structure here, it doesn't become a bearish market until that happens. So until then, we're still bullish and we're looking for highs, high highs, high lows. Yeah, any questions on trends?
No, that's good. It's quite helpful because on order blocks, you really need to go with the trend, as you guys say. Otherwise,
yeah, that's why this has to be the main thing.
You'll get sat on, literally.
Yeah, especially when you got like less than 10 pips stop loss. If you're against the trend, literally one momentum push could just take you out straight away. So you've got to make sure you're with the trend on either the daily or the 4 hour. But yeah, it's not as clear here, but even if you were looking for trends, again, I'll just go over this one last one. So this is like your high, higher low, higher high, higher low, higher high. This one's still higher than this level, higher low. This one doesn't quite break this level, so this can't be a high high, and this can't be a low, so this one would be a high. This one would be a low. This one's just above high. That could be potentially a low. Again, high, low, high, low. They don't have to be clear, you know, what you get taught in the general courses, but yeah, hopefully that makes sense. If you're using the 4 hour, obviously this would be whatever. And then since you've got the trend, if this was your order block here, you know, you place your limits here and then whatever. But yeah, hopefully that makes sense.
Yeah.
Yeah.
Any questions? No.
I have a question for Tans. You know when you go into the 1 minute whilst it's inside the order block, could you kind of like demonstrate how to identify breaker blocks and, you know, when you identify the trend has changed? Because that's what I'm struggling with the most. It's like the 1 minute things.
Let me go to the other stuff. Okay. Where's my screen gone? Can you guys see it?
Yeah.
So, have you watched any of the breakdowns, by the way, Henry?
Yeah, I've seen some of the breakdowns, but for me, it's quite hard to identify which one is the breaker block.
I think this one was quite a clear one. I'll go back to this one again. So essentially, the reason that I entered off the breaker block here, that one there, is because we've got a break of structure because it's broken this that low there.
Yeah.
Right. After creating a new high, it's even broken this low and that one, but we didn't create a lower high yet, so price could obviously just come back. Now we've created a lower high here, and then we've broken this most recent low. So now I know that there's a shift in market structure, and that's literally all it is. It's the same for if you're looking for a bullish move. So say, for example, so say if we're looking for a buy in this trade, right? So let's just focus on this bit here. Right, say if we're looking for a buy on the overall bigger picture, for example, and we've got this change of structure, right? We've broken various structures here, and it doesn't matter in the sense that you don't need to enter on the very first break block. It doesn't matter where you enter because there's so many different opportunities that you can find. Yeah. Essentially, what you need is, if you're looking for a buy, you need a new high and a new lower high, and then a new high after that, and then you enter on the breaker. And then for a sell, you've got you need to have a new low, a new higher low, and then a new low, and then you enter on the pullback of that.
Okay.
Did I say that too quickly, or is that okay?
Yeah. So this would be a breaker, right? And if this came back up, oh my bad.
No, that's fine. I moved it. I couldn't see it. That's why.
Like so that would be a breaker. If this came back up,
Yeah.
this would be a breaker.
Yes.
Okay.
Yeah. So there's breakers and order blocks all along, which is why that you'll notice that you will get stopped out on a fair few trades, because it's hard to decipher which one, especially in the lower time frame, which one you want to go for. Which is why you have to be a little bit patient to make sure we do have that trend shift. Because here we can, if we're looking at just this section, if we're just looking at this section here, right, we've got this low being formed, and we're creating equal highs. We're not really like changing. There's no structure change here. Even if we create new lows in this little area, we're still not breaking this low to consider even looking for a bearish move. We need to have a break of either this high or this low. And now that we have that, we know that there's a shift in market structure and a change in trend. So now we can start looking for a bearish move. If the overall move that we're looking for, if we're in a bullish order block in this example, then we'll be looking to look for buys. Obviously, for this we're looking for sells, so we wouldn't really consider that. But we're only looking for the opposite of that. So we're looking for new lows and new higher lows to be formed.
Yeah. So you're not considering like the. Can you go back to the last bit of the chart? Maybe press undo.
The bit that was on before.
Yep. I mean, I think it was the 1 minute.
I was just going back to there. Yeah. Yeah.
Where was it? So you're only looking for basically closes. You wouldn't consider like sort of I don't know. Maybe the last graph had the better.
Which one was it?
Sorry, I think if you press undo a few times on this NZD, I guess this will do. So like you, sorry.
Sorry, I keep moving it. Where are we looking at?
So you're looking for really like clear something like this, and not just at wicks, for example. Because I mean, like you could look at this and be like, "That's a higher high."
Oh, I see. Yeah, yeah.
Do you know what I mean? Like, it's quite like because I've been kind of doing this, looking at wicks at the lower time frame, and maybe that confirmation is less probable. I think that's the issue I was going with.
Yeah, you want like a clear, especially in the minute. It's quite hard to, because you do get all this. There's a lot of wicks in the 1 minute. You want like a clear, like that will be a low. Now, because we haven't broken this, I wouldn't consider that a high as such, because we've not broken. It's not what Ben sort of touched on, to be fair. We've not broken this high, so once we've broken here, that's the new high that I'll be looking at.
Okay. Yeah.
That'll consider like a change in market trend.
Yeah. Okay. Yeah, because I've been doing a lot of scalping lately and looking at like wicks and things, and it's just a different kind of way to think about it if you're on the 1 minute, I guess.
It is, yeah. I mean, the whole concept is a different way of seeing the markets as a whole anyway. So it's quite confusing to. It's clear on the high time frames to obviously decipher where your highs and lows are. It's just getting the eye for this of deciding where is your, because you know where I've entered actually on this trade. Let me find it. Oh, were you going to say something, Ben?
No, I was going to say go back so I can annotate something quickly, but it doesn't matter. I didn't know where we were.
Like, for example, this would be quite hard to decipher as a lower high for some people, but it's only because we've created a clear low and we've created a lower high. The only way I consider that is because of this low that's clearly been formed. I know there's a lot of small, minor pullbacks here. It's only because that's a clear like correction.
Yeah, you can use the line chart as well, and that one would be the more, if you change from candles to line, not that one, the one next to the 1 minute.
Is it this one? Oh.
Yeah. So like, if it has like a severe like change in direction rather than just a mini point.
Oh, I've never considered that, to be fair. But that's a good shout.
Because the other ones are kind of smooth, where this one's like a clear. It rises and then it drops again. So yeah.
Oh yeah, I see what you mean about the points. Yeah. Oh, that's a good way to see it as well. Oh, fair play.
Yeah.
Did that answer your question, Henry?
Yep.
Nice.
Thanks.
Anything else?
Let me just annotate quickly. So like, in
We're
this
going
area here, it's important that you don't class these as your sort of highs and lows, and you try and go for the bigger picture, even on the smaller time frames. So obviously, this would be a high up here. This would be a low. This would be a high. This would be a low. Rather than like this area, and you try and keep like the structure overall. I don't know if you can see that properly.
I think I know why Henry is actually thinking. Henry, did you follow the price action strategy?
No. I was just doing some other, like, I was following Wicks Don't Lie's, like, kind of
Right. Oh, okay. Yeah.
And you know, because you're on the 30 and the 15 quite a lot, and you look at, like, you know, that's a high, that's a high low, that's a high low.
Yeah. I know how you're seeing it now. Yeah.
Yeah, if you're scalping, then them ones you can class. But for the order block strategy, you want to have like the strongest ones, the bigger overall move.
Yeah. Okay. Yeah, so now it's better just to identify this as like an actual high. This is a high, you know, that kind of thing. That's a low.
Yeah, so seeing like clear,
Like
basically
supporting
highs and
this
lows.
formed, I think it's probably a good way to identify it with this.
Yeah. Oh, right. Anything else, or before we wrap up, or?
Is everyone focusing on order blocks at the minute?
I'm leaving it for now, I think. Just for a little bit.
Are you still struggling with it, Molly?
Yeah.
Tune can do one to ones.
What?
You can do one to ones, don't
No, yeah, I'm just going to leave it for a little bit until I can wrap my head around it a bit more.
You had a good AED CAD, I think I saw.
Which
Oh, the
one
one
was
you
it you sent me,
commented on,
Molly?
I felt so privileged. I was probably made up with that, you know. So funny. Yeah, it started retracing back a bit. So I was like, okay. Do you know what though? I've not actually been putting anything into MetaTrader, you know. So like I've had my demo account for like a month now, and I've just not been placing any trades. I've just been doing my analysis and then just watching them play out. I haven't actually put them into MetaTrader. Do you know what I mean? So I need to start doing that really.
So I mean, if you got a record of it, it's not
them
too
logs
bad.
you sent me, were they trades that you'd placed?
Yeah, no, I hadn't put them into MetaTrader. I just watched them play out.
Right.
Well, if it's a demo, you might as well put them on just so you know.
Yeah, I know. I don't know. Do you know what? I feel like this is going to be an issue, you know, because like I'm shitting myself just to even put it on a demo. Do you know what I mean? I start getting sweaty and I'm like, Molly, it's not even real.
Yeah. Well, I mean, there's no harm.
I know.
There's literally no harm.
No, I literally know. I think I did. Do you know what? Tell a lie. I think I did one